The first time I hashtag get off zero was 2018 and Bitcoin was $6,700. But, and to your point, it was even before that back in 14, 15, where, I went to my clients, institutional clients for the first time, first quarter of 14, and they're like, you're an idiot. Don't talk about that. That's just stupid. People just need to get off zero. It is time. I mean, this is going to be the most powerful movement, both in terms of people, volume, value, that we've seen so far. And each successive one will get bigger. That's the law of large numbers. But it's going to be powerful. So join us.
According to a filing with the United States Securities and Exchange Commission, SEC, Fidelity has become the latest financial giant to file for a spot Ether ETF. The filing proposed a rule change that would allow the exchange to list Fidelity's proposed Ether fund. It bears mentioning that the proposal closely resembles Fidelity's spot Bitcoin ETF proposal, which was submitted to the Commission in June. To get its proposal approved, Fidelity cited the recent ruling in the Grayscale case, where the court rebuked the SEC for not having the coherent reason for rejecting spot crypto exchange-traded funds. Recall that Grayscale took legal action against the SEC for rejecting its application for a spot Bitcoin ETF. Interestingly, the crypto asset manager won the legal tussle, as an appeal court ordered the SEC to review its decision to deny Grayscale's application. According to Mark Yusko, we have just 6 weeks to the greatest pump in liquidity and a potential kickoff the bull market. He is very optimistic about this chain of events and advises that everyone should be prepared as well. Let us now get into the video and hear what Mark Yusko has to say. As you watch, don't hesitate to hit the like button, subscribe, and drop your comments below.
And they're coming. Everybody's coming. Literally everybody. And first couple weeks of January, kind of the kickoff for our London event. BlackRock ETF is going to get approved. Hundreds, plural, hundreds of billions of dollars are going to go into Bitcoin. And that's going to trickle down through the ecosystem, and the digital age will be here. And the thing about it is, we've been talking about this, right? 2024 is the 14-year cycle. And it's only 6 weeks away. I mean, we are 6 weeks away from the beginning of this powerful 14-year tech cycle with, blockchain at the core. And I'm super psyched. I said at this conference in New York, and it's like making the rounds on Twitter, I said, look, there's actually a chance. They quoted me as saying it will definitely happen. I said, there's actually a chance that Bitcoin could become the base settlement layer for all global assets. And everybody's like, and then there's other people. Oh, of course. That's what we've been saying all along. Maybe not, but okay. But here's the thing. People who are, ETH heads are like, no, there's more transactions on ETH. I'm like, that's not what I said. I said the ultimate settlement layer for the highest quality assets likely will be the highest quality chain. How do you judge quality? I don't know. Uptime, lack of hacks, security. Okay. So you can make a case for both, but at the end of the day, what I see happening is the highest value digital assets are migrating toward Bitcoin. That's interesting. And it doesn't mean you can't have, to your point, other systems that do other things and even have monetary use cases, but they won't be money. Like if you believe, as I do, that Bitcoin has won the war for digital gold, right? That it is a better form of gold. It's equally scarce and more divisible and more portable. And therefore it will replace gold as that base layer. Then we can abstract all we want on top of it. And it's not going to be without a fight, right?
Markets may be betting the Federal Reserve's campaign of anti-inflation rate hikes is over, but at least one official isn't so sure. Much like a string of Fed officials who spoke earlier this week, Susan Collins, president of the Federal Reserve Bank of Boston, said she was encouraged by recent data on inflation, showing that consumer price increases are cooling off faster than expected when she was interviewed on CNBC Friday. However, she didn't agree with traders who are overwhelmingly betting the Fed's next move will be to lower its benchmark interest rate from its current 22-year high in the coming months. "We need to be patient and resolute, and I wouldn't take traditional firming off the table," she said. "We need to look holistically at the data." Mark Yusko shares his view regarding the rate cut, inflation, and the interest rate hikes. Let us now dive into the macro.
You and I have been talking about this literally for a year. And we said that, that inflation that everybody was worried about actually wasn't inflation. My view has always been it's never been inflation. It's never been excess demand for limited supply of goods. It was always currency devaluation, which caused oil prices to rise, and the lockdown, horrible policy decisions, which messed up the supply chain, which made used car prices go up, for a short period of time. All of that is now gone the other way, and we're back to where we were. And yet the market reacts to it like it's some massive amount of good news. And, I think we're up 10% plus in November here in equity markets. Now, I'll explain why that is. And again, we talked about this a few weeks ago. It isn't inflation. It isn't anything other than the November effect, which used to be called the January effect. And it's the fact that, people sell all their bad stuff in October. When I say people, meaning the mutual funds, they have to sell before October 31st for their fiscal year. And then they have to wait 30 days to buy it back. So that's been moving, or it used to be, right before October 31st. Then it was like October 15th. Then it was like the first couple weeks of October. And so what was happening is there was this rally, then 30 days later in first part of November. And everybody said, "Oh, it's the Santa Claus rally." It's like, no, it's not the Santa Claus rally. It has nothing to do with Santa Claus. Santa Claus is a mythical person. But this has to do with real people buying real stocks 30 days after they sell them for tax losses. And that's what's happening, I think, in the markets. And there were a lot of people who were short, who got caught offsides, just like the Bitcoin rally. People were short and they got caught offsides. And so we got this big rally. And then they misinterpret this. We're at 3%. And Professor Plum, Mike Green was on a clip I saw on Twitter. It was kind of funny. He's like, people do realize that 3% means prices are still rising, right? They're rising less than they were the month before and 6 months before, but they're still rising, right? I mean, people do understand that, but I guess not. I never like to disagree with Paul. With Paul Tudor. No, with Stan Druckenmiller. He was talking to Paul Tudor Jones, but I just don't like to be on the other side of investment legends, right? But I just vehemently disagree with this whole idea that inflation is going to go to high single digits. Look, I think inflation is driven by working age population growth, and working age population growth stinks. It's headed to sub 1%. The boomers keep aging every day. 10,000 more of us turn 65. I still got a ways to go, but it's going to happen. And that I just think we're going to be much more in a deflationary environment than an inflationary environment. And look, the 2% number, it's just the theft target. There's no normal reason for quote unquote prices to rise just because. Prices should rise when demand exceeds supply. That's economics 101. But this idea that by increasing the money supply and therefore devaluing the currency, because that's all this inflation target really is. It's a devaluation of currency target. And the big spike and the expectations lag the reality. So these expectations weren't before the Fed printed all the money. It was after the Fed printed all the money. And then magically people were shocked, I tell you, that the prices of things and the quote unquote value of things went up. And we've talked ad nauseum about this. They didn't. My house did not get more valuable. It just didn't. The money got worse. And now, for the first time in 100 years, they're restricting the money supply. They had negative money supply growth for the first time in 100 years.
Bitcoin whale's consistent accumulation since the beginning of 2023 has resulted in addresses holding more than 1,000 Bitcoin, accruing a total of 7.66 million Bitcoin. The Federal Reserve has been rather silent regarding any regulatory update for the cryptocurrency market. The rising concerns owing to this issue have led to the Vice Chairman for Supervision, Michael Barr, making certain hostile statements regarding the crypto market. Michael provided his opinion regarding stablecoins and the impact of the crypto market on financial markets. He stated that stablecoins and private money, including cryptocurrencies such as Bitcoin, have historically proven to be extremely explosive if not placed under regulation. He went on to discuss whether or not stablecoins should be a crucial part of the growing adoption of blockchain and associated assets. He stated that the stablecoin innovation should be allowed to happen, but only within really clear guardrails. Lastly, talking about the impact of the crypto market's volatility and recent crashes on the traditional markets, Michael stated that the banking system has not been deeply exposed to cryptocurrency risks. This is because most banks are taking a cautious approach when it comes to these digital assets. Thus, even though there is no clear statement from the Federal Reserve on what the future of cryptocurrency regulation is, the need for it is iterated now and then. The crypto investors, however, are mostly not bothered as they continue to keep up the optimism of the rally. Furthermore, the highly awaited approval of spot Bitcoin exchange-traded funds is also expected to take place in January of next year. The anticipation has also proved to be a bullish trigger for Bitcoin in the past month. Whales intend to capitalize on this opportunity, which has resulted in the addresses holding more than 1,000 Bitcoin consistently accumulating for the past 11 months. Year to date, these addresses have accrued more than 120,000 Bitcoin worth over $4.32 billion, bringing their total holdings to 7.66 million Bitcoin. Thus, as Bitcoin price rallies, these investors could see significant profits on their accumulation. Do you think the bull run will start in 6 weeks as Mark Yusko predicts? Let us know your thoughts in the comment section below. Also, don't forget to like, subscribe, and turn on notifications. Thanks for watching.